Cool.
We are live.
Yep. Perfect. All right, so it's like 2 more minutes, 2 to 3 more minutes for people to join.
Where do I get the URL of the live to share it? Do you know?
Here, I found the LinkedIn one. I know everyone. We know we're live. We're just waiting a minute for people to join.
Yeah, just 1 or 2 more minutes.
I posted a LinkedIn link in the private chat for you.
Yeah. All right, so 1 more minute. All right, so more people are joining. Just give it like 1 more minute, and then we can get going. Okay. Hi, everyone. Good afternoon, good evening, good morning, and good day. Welcome to the second episode of the State of the Ecosystem. I'm Melvis Langientuo, and I'm the head of the Canton Foundation. This series is about what's real, the builders, applications, and activity already live across Canton Network, and the progress happening across the ecosystem every day. Canton is the proven link between the power of global finance and the real value of blockchain, where finance flows 24/7, atomically, and with privacy. Each episode begins with a brief overview of what's new across the network, the applications, the validators, and the integrations, followed by a conversation with builders who are using Canton in production to solve real-world problems in finance and other sectors. Today, I'm joined by Joris Delano, CEO and co-founder of Fairmint, and Josh Frank, the CEO and co-founder of The Tie, two builders who are demonstrating how Canton's privacy, interoperability, and aligned incentives are driving real utility and sustainable revenue for builders. There will be time for questions at the end of the session, so please leave them in the comments. As always, I need to mention this disclaimer. The podcast is for informational purposes only. Nothing discussed should be considered financial, investment, or legal advice. Always do your own research. Now for some network stats and updates before our conversation with Joris and Josh. I'm going to share my screen and we'll go over a couple of stats. All right, it's coming up. Do you guys see my screen share?
Yes, we do.
Perfect. So Canton is truly leading the convergence between crypto and TradFi. If you were paying attention, you might have seen this global diagram of the network within the recent Tie article. There are many infrastructure solutions, assets, and applications that are congregating to Canton. We will dive into some of these very shortly. Lately, the Canton Foundation team has been very busy working with partners to launch new financial products to increase the liquidity and velocity of Canton Coin. Recently, there was a Canton DAT that was launched that was led by some of our ecosystem partners, including Cumberland and LCV, with participation of some of the super validators, and some of the application builders within the network. This vehicle allows for many partners who are not used to or cannot hold Canton Coin to be able to participate in the ecosystem. On the crypto front, centralized exchange perps were listed, and then soon we will have spot listings as well. Along with product that are for trading, there have been asset security and custody solutions that were launched that are very important to our network. We welcomed new partners in this segment, including BitGo, Ledger Wallet, and C8 Wallet. And it's been very incredible to see the growth and community engagement with our existing partners, such as Canton Wallet by Send, Braun, 5 North Loop Wallet, Zodia Custody, Copper, and many others. The Canton Network on-chain application growth has been very vibrant as well. And I'm going to share a couple of slides to showcase this as well. Give me a second. Here we go. As the community grows, the DeFi ecosystem is also expanding massively. We've been getting new assets launched and some coming up very soon, including USDC, CBTC, Solve, Lombard, and a broad network of tokenized real-world assets that are leading the rankings, as you can see here in a newly released table within rwa.xyz. As you can see here, looking at all of the assets that we listed in the RWA segment, Canton is leading with over 8,000 asset issuers and nearly $400 billion across all the platforms that have been launched within Canton technology. Products are also gaining traction in the ecosystem, such as Temple, Canton Swap, newly coming Canton Exchange, and a host of lending and borrowing and yield aggregation platforms as well. There are over 45 featured apps on the network, and it's been incredible to see that during the tokenomics committees, we get over 5 new applications that come onto the meetings to present their new applications for the network. Increasing Canton on-chain traction has also enabled fees burnt on Canton to become the top 1 producer in crypto. And it says that we're currently at about $1.5 million of fees burnt each day, ahead of Tron, Ethereum, Solana, and some of the other major chains that we're all aware of. On the foundation front, we have over 50 members who are part of the foundation, and looking at the validator stats, there are over 30 super validators, 600 validators, and today we have more than 20 node as a service solutions. And now we're gonna jump into the section with our guests here today. Joining me today are 2 incredible builders who truly represent the momentum we're seeing across the network. Joris, can you please introduce yourself and tell us a little bit about Fairmint?
Yeah, hi everyone. Super excited to be here on this live. Thanks, Melvis, for hosting us. I'm Joris Delanoux. I'm the CEO, co-founder of Fairmint. At Fairmint, we bring equity on chain by turning cap tables into smart contracts. And of course, the reason why we do that is to be able to bridge this asset class with DeFi and embrace the old composability. So I guess I will dig in a couple of minutes on the reason why Kenton is now very important for us. But yeah, super excited to talk about all this today.
Great, thank you. And Josh, can you please introduce yourself and then a little bit about the tie?
Sure. Thank you for having me on. Thanks everyone for listening. Yeah, and happy to start with the tie overall, and then we can dive more into what we're doing on Canton later or whenever you want. But at a high level, I like to think of the tie as being the leading information services provider for digital assets. Our core customers are hedge funds, asset managers, banks, VCs, prop trading firms, market makers, OTC desks, you name it. And the core problem that we solve for them is that information in crypto is siloed across thousands of disparate sources. You walk into a hedge fund's office, you ask them how they're staying on top of crypto. They'll show you 72 different tabs open on 16 different browsers. Our goal is to consolidate all the information that a fund sees into a single screen. And so today we work with over 500 institutional customers across terminal, API. We do a lot of data distribution and a bunch of other things in the space. We've been around for about 8 years and doing a lot specifically on Canton as well.
Amazing. Thank you. And now we're going to dive into the questions, and I'll be alternating questions back and forth until we get to the end and then open up for the community. So to start out with, Joris, can you please tell us a bit more about Fairmint, your mission, and what your feature app on Canton enables? And then also, can you dive into what made you to switch from Base or Solana to focus on building within Canton?
Yeah, so Fairmint is a long journey. We started 7 years ago with my co-founder Thibaut, and we went through one of the hardest paths, which is the equity securities, and to set the market a little bit. So in the securities market, you have on one end the debt, and on the other end the equity. And in the equity market where we are, you have two types of markets. You have the public market and the private market. So we started Fairmint on the private market. How can we help founders and their legal team to literally manage their cap table, manage their investor, onboard more investor as well? So cap tables is the foundation. And as I mentioned it, the fact that we are with Fairmint on the private market means that privacy is important. To give you a bit of context, so over all those years building Fairmint, we were working mostly with very early stage businesses. For them, having some basic information on chain was okay. So the Fairmint started on Ethereum L1, then we started to move to Optimism and Base. And a year ago, we decided to make a Rust implementation to test the velocity of this cap table on Solana. But very fast, when we started to onboard more players, bigger players, we started to interact with board members. And those people were like, hey, guys, we are okay to use your solution, but we don't want to be on a chain where there is a risk that people can retro-engineer our valuation, or where people would easily see that our employees are effectively exercising their options, which most of the time means that something is happening. So for all those reasons, we started to have this issue of how do we deal with privacy? How do we make sure that the way we sell them, that we obfuscate some part of the smart contract is enough? And obviously it was not. And I guess that is to be compared to the rise of privacy chain and privacy solution, because when this happened, we started to dig on FHE solution, on ZK solution, and that's when we got exposed to the Canton white paper. And we were intrigued at the beginning, like, oh wow, how does it work? Is it serious? Is it legit? Should we go this way? And after 3 months checking on things, that's when basically we decided to say, okay, maybe we can bring the cap tables and all the things that needs to remain private for our private customers to Canton, but without compromising also our ability tomorrow to do some form of composability with any other ecosystem. So that's when we released the Open Cap Table Protocol white paper. That was in March, April. And the goal was to set things so that whatever asset lives in Canton, we have some sort of ledger. That's the source of truth. We are an SEC registered transfer agent, so we need at one point to make sure that all this is accurate. But at the same time, we need to find ways where we interconnect with any other ecosystem to bring always more liquidity to the holders of those assets on Canton. And so basically, yeah, the whole move to Canton was driven by the request of our customers. And what's great today is that on top of finding a solution, we met with a completely new ecosystem. But maybe we'll talk about that later.
Definitely. And then we talk a lot about the importance of assets being truly on-chain or digitally native, rather than just tokenized representations. How do you see the shift from tokenized assets to natively on-chain assets unfolding? There are some regulatory drivers for this as well, especially in the US and with equities itself. So if you talk more about your experience and your evolution of thinking through digitally native versus wrappers.
Yeah, so I'm a firm believer that most of the assets will move on-chain. It's been 7 years that we bet on that. So soon we won't even have the qualificative, like, is it on-chain or not? It's just like the cloud 15 years ago. At the beginning, you were doing a cloud company or a cloud application, but now no one say that anymore. I think we'll have the same path. That being said, the market has been opened by the tokenized stocks over the last 8 months, basically. And most of those are wrappers. The law is not on-chain. And I always say our challenge is to make sure that we bring the law on-chain, because if not, then we don't have a really on-chain asset. We have at best a digital twin, and we create some form of complexity or risk that needs to be disclosed to the investors. Because when you buy a wrapper of SpaceX, for example, but you realize that you are actually on the fourth line on the cap table because there is 3 SPVs on top of you, you can question who are those people that are managing those SPVs and what is the real collateral that you are effectively holding in end when you buy that. And so far, like you said, it's in the US, yes, the regulation is here. It's clearly a completely different regulation from before, very friendly to builders and innovators, but at the same time, it remains a security most of the time. And we want to make sure that those stocks that we are issuing are effectively natively on chain, and that the whole legal component of the asset is on chain as well.
And that's a good point in the sense that being able to figure out how to perfect the title so the pure rights and obligations are transferred from one owner to another is very key. And at Canton, we've been able to solution for this, and we'll talk more about it as the conversation goes on. And hey, Josh, with the tie has become one of the key source of information and analytics for institutions participating in digital asset. What role does a tie play from a data and insights standpoint to governance and also building applications within the Canton ecosystem?
Yeah, so we do a lot in the Canton ecosystem.
Yeah.
So we'll try to
Break it down.
make it, try to simplify it and keep it keep it that way. We've been working with Canton since testnet, and so we've been involved really. Definitely not since the start of the network, because the journey started 10 years ago for DA. But for the last few years and before, I would say a lot of crypto natives had come in and had gotten excited about Canton, really drawn in originally. We're close with, Goldman and a lot of the other big banks and others that had been investors in DA. And I just heard great things about, the network and DA and DAML and everything that was being built. And so got involved with the network extremely early as one of the first super validators on the network. The first thing that we did was, naturally somebody had to add support for Canton data. Somebody had to be the first person to do it. And so we were the first person to really index the chain and build support for the network and really work very closely with DA to figure out what is the story that we need to tell about Canton. I mean, one of the things that's very unique about the network is its privacy features. So on Canton, the only thing you can see, imagine Melvis and Joris sent money to one another. You can only see the amount of Canton coin in the transfer. But what if Melvis sent Joris 100 USDC? You wouldn't see that. You would just see the amount of Canton coin. And so really had to be thoughtful about, well, what is the data that we want to show to tell the story of this growth of the network, which is the growth of apps, the growth of transactions, the growth of validators, the growth of wallets, the growth of fees and things like that on the network. And now we're working to continue to expand that and having conversations about, there are a lot of permissioned subnetworks that exist on Canton. How do we expose data on those permissioned subnetworks? How do we maybe work with applications or certain, folks on the network that are doing these transactions that maybe can't show us exactly what they are, but can show us data at a high level. And I know Joris has some pretty cool stats about what they've been able to do, for example, which maybe you can't see on chain, but potentially could be exposed. And so got started really by, telling that story using data. And so we built a public website that anybody could use. It's free. It's called Canton. It's canton.thetie.io, or you can just search for Canton Analytics on Google and it should pop up. We finally fixed our SEO problem yesterday. Very excited about that. And then we've also written a ton of research on Canton. So we've now written 4 research reports on the network. We've added Canton support into our platform as well. And we've also built a number of applications on the Canton network, including an application which we call Cantara. And you can think of Cantara as kind of being like a Stripe or a payment platform for the Canton network. It allows application developers to launch their own applications and charging Canton coin. And that's now processing over 4 million transactions a month.
Amazing. And then as a follow-up, you recently, based off of the Tie dashboard, the Tie research report that you just published, what are some of the standout insights that tell the story of the growth of Canton right now? And also, how has it been received across your network? What are people saying about Canton?
Yeah, I mean, let me actually share my screen if that's cool.
Yeah.
I mean, I think the best way to do it is I don't need to say it. You could look at the chart. The chart is straight up and to the right. So, I mean, you can see, the growth in terms of unique parties, daily active users, daily transactions, also burn over time. I mean, Canton is now, as I think you mentioned earlier, generating about $1.5 million in daily fees that are being paid to the network. So, I mean, it's something you can visualize and you can see. I mean, we're seeing this massive growth in validators and applications and users and transactions and revenue. So really seeing a ton of growth across the board. And I think, Canton was something that I think, to be transparent, a lot of people initially dismissed about a year or two ago when we started talking to them about it, because I'm like, well, it's this enterprise privacy blockchain, is anyone actually going to use it? Is anyone going to adopt it? And the conversation has really shifted, I think, over the last 6 months to people being like, holy shit, there is so much activity here. There's real building, there's real development. People are really excited about it. And we're seeing all these institutions that I think, honestly, were kind of dismissive like 24 months ago, 36 months ago, when we said we were building here, now really starting to adopt it, come in, asking, how do I buy it? Can you connect me to somebody who has tokens that will sell to me OTC? Why won't anybody sell to me OTC right now? So I think it's definitely starting to gain a lot of traction, a lot of interest. And I think obviously among the traditional market participants that I think have always been interested in DAML and building permission subnets on Canton, but I think now more the crypto native network. And I think it's not just, I mean, obviously Canton, I think, is the big driver of it, but you see this massive move in privacy. I mean, look at Zcash, look at Horizon, look at all of these privacy, Monero, all of these privacy coins. I mean, Zcash is up 1,100%, I think, on the last 30 days or 90 days or whatever kind of thing. So there's been this massive shift in interest in privacy, and I think Canton is obviously extremely well positioned, but not just positioned to do that for retail, positioned to do that at an institutional and enterprise scale, which is why folks like Joris at Fairmint, have decided that it's the best solution for them to tokenize equity.
Yeah, and then quickly, so how does Canton's growth compare to others that you're seeing across the ecosystem, across crypto, blockchain, holistically, right now?
Yeah, I mean, look, you look at the chart, and I don't think you're going to find a more vertical chart today. I mean, I think it would be hard to find a chart that looks a bit more vertical than that. But I think it's really starting to catch up with all of the top chains of the network. I mean, you saw today Canton being I think you showed the top fee generating L1, and it's been consistently among the top 5 or so over the last few weeks or months. So yeah, I mean, I think it's starting to catch up, and really for a while from a user perspective it wasn't there yet. We're starting to see that traction, but keep in mind this is all pre-listing on a centralized exchange. Once Canton lists on a centralized exchange, you're going to go from 50,000 daily active users to naturally just a massive expansion of that because of all of these new users generating wallets, getting access to the token. And so I think you'll continue to see that growth, especially obviously perps are live, but with people actually being able to, people can create an account on one of these wallets that you mentioned earlier, but it really enables broader access once there's a centralized exchange listing.
That's a good point. And hey, Joris, you and Josh, you both have live applications on Canton. Can you talk a little bit more about the experience of launching an application within this network and the expansion of those applications with users that you're bringing from other networks to Canton?
Yeah, so Canton has his own language, smart contract language. It's called DAML. It's very close to Haskell, so any dev that already know Haskell is able to jump in pretty fast. But so far, our team, when they decided to move, they were like super deep into Solidity. It's been 6 years that we were building smart contract on Solidity, and any type of smart contract. Okay. The compliance smart contract, the transfer smart contract, like anything that was needed in the operation of an issuance or a trade or a cancel of a share was part of those contracts. And so when we decided to move to Canton, I remember it was like 3 months after we started the Rust implementation, which was already a challenge for the team. And so the way we approached that was, one, we let some time to the team to dig on all the education content that is available on Canton, either on digital asset website or through things that we can read wherever we can. And then we started to build immediately. We didn't wait. We were on testnet. We were immediately trying to make things work, connecting the dots. And it went so far that our whole infrastructure relies on Privy today, and Privy doesn't support Canton. I should say didn't, because we've been working precisely as a team to make sure that we were able to bring all those accounts that we had with people, over 15,000 people that already had been verified with their accounts and everything. And we had to migrate the customer plus these end users, all the people that own the portfolio that is under the hood of a wallet. And so this technical challenge, to be honest, was kind of scary, but the knowledge, and I think Josh mentioned it, the fact that DA has been building the tech for 10 years. Like it's not something that we just arrive and we test it. No, it has been well sought for so many time that when we started to dig on, we felt that we were not left alone, that we had sufficient content to approach the stuff. And right now, yeah, I have to share that going on chain shouldn't be an event. It should be a non-event for the customers, right? It's just an infra. And whether we go on Canton or Base or whatever, they shouldn't be impacted. And that's what we've been trying to do. I think Canton offers this robustness when it comes to switching, when it comes to scaling, precisely because, yeah, there is this 10 years of experience behind. You're muted, Melvis. I can continue, but
I was going to say, I'm sure what you're
And
saying
now
is phenomenal, but unfortunately, we can't hear it.
Yeah. I was about to say next section is we're going to talk about the cantonomics and the builder incentives, because that is probably one of the most unique and special parts about the Canton ecosystem. So one of the big differences we have is how incentives are aligned across the builders, users, and operation providers across Canton. And with regards to this, starting in January 2026, 62% of new supply will be available for featured applications to claim. And this is a massive differentiator across other networks in the sense that the value and transaction activity and utility growth for the network typically goes to just the infrastructure providers. Within Canton, these rewards are distributed in three parts: the super validators, and also the applications themselves. And so with this, Joris, I wanted to ask you, how do you think the tokenomics as a tokenization platform provider, and in particular, how it contributes to and shapes your revenue model, is incentivizing your team, your users, and broadly the ecosystem?
Yeah, well, that's a very good question. Sorry. So here is what I think about that. I think that when you read the white paper and all the tokenomics that was done, it has been super well sold in a sense that it's one of the biggest project that did a fair launch, right? And fair launch means you don't start with a few players that are holding the bags at start and that have like a huge chunk of coins. That, I think, is one of the key components of Canton. And two, the way they wanted to incentivize builders to come and build is yesterday we were chatting about that with my team, and during the team meeting my co-founder was like, Canton is a master class in building a network. And I think it's true. Like, everyone that is deciding to work on Canton can get a fair share of value that he can extract from the network in exchange of the work that he does, whether he's bringing people, whether he's bringing activity, whether he's observing. Like, pretty much any behavior right now is incentivized. And of course, when you are at the beginning and you have a few players, the incentive is super high. But we are, and that's what I love. Every Wednesday, we are in these meetings that are almost like a community call now. You have 60 people that are here every week, that are listening to each other, that are working together when it's not during the meeting to prepare for the next one, that are sharing also how to build better, how to help support the network, how to not supercharge the network as well, to make sure that scalability is an ongoing process.
Yeah.
And honestly, that has to be said, because there is, behind Canton today, there are so many players and so many people that are effectively working. And under the hood, there is also all these end users, the one that are holding asset, the one that are getting reward for participating in the network for their effective action. In my context for Fairmint, it would be shareholders of companies that are using us for their captable solution, and that all things through their portfolio. And what's fantastic is the way today Canton is some sort of replacement of your own token airdrop. you can just leverage Canton without going through your own token. You can just like focus on using the Canton coins as the new asset that anyone that is participating to your app would get access to. And on top of that, we are not yet listed, so it's even better. But what I mean by that is you can, as a founder, as a founding team, as a builder, literally create a whole ecosystem that relies on the Canton coin. That's fascinating, I think. And I think it's pretty unique.
Nice. Awesome. And then, Josh, the tie looks at many token economies. What makes the Cantonomics stand out compared to other more infrastructure or investor heavy models that you've seen elsewhere?
Yeah, I mean, I think Joris said it much more elegantly than I could. So I think you guys should definitely clip that and reshare that 100 times, because I'm not going to do quite as good of a job as that. But I do think it's the very unique token economic model that exists on the network, right? Which rewards apps. But the other thing is BME, which is Burn Mint Equilibrium, right? And BME is basically this concept that transactions on the network generate a certain amount of rewards. At some point, it will cost the same amount to transact as those rewards are. And until that point, there is an incentive to continue to transact more and more and more. And there's more and more and more development and applications that will come on the network. And BME hasn't been hit yet. And we're already at $1.5 million in daily fees. And what I mean by is unique, what I mean is unique here is we're probably going to get to somewhere around, and I'm just throwing this number out there. It might not be exact, but figure about $3 million in daily fees on Canton before we hit BME or something around that number, which means that the network is going to be generating, $360 million about $1 billion in annualized fees and burn before we hit BME, which is quite unique. And so, everyone talks about the FDV of Canton, but Canton doesn't really have an FDV because you're naturally going to hit this BME point, which is basically going to completely halt net new issuance on the network. And so I think the cool thing is just the way that the application is and the chain is engineered and it's developed. There's an incentive for people to continue to build new things. And then once that BME is hit, there's an incentive for, applications that really drive real usage, have real use cases to continue to operate and drive activity. So I think it's a very cool model because it's very unique and it's very different than other chains in that, to Joris's point earlier, there's an incentive for development and continued development on the chain. And there's naturally kind of just going to be like $3 million a day or $1 billion a year burned at current price levels.
Right. That's very well said. And then overall, like one of the key ideas behind the Cantonomics is that anyone contributing real activity or assets to the network, whether it's a tokenization platform, a data provider, or a stablecoin issuer, can participate in the rewards, as you guys mentioned. And some people see that as a potentially creating a kind of a flywheel effect, where more builders join because they're directly rewarded for the utility that they bring to the overall network. Cool. And then let's see, following that, in a world where many builders are struggling to monetize usage and capture value for their application, what differences does it make to have that continuous on-chain revenue stream tied to activity? So this question for both of you. So having the revenue stream and activity that you bring, what difference does it make in terms of you thinking about where to build?
I think that's kind of a pretty obvious question there, right? If you're getting paid to build somewhere, there's an incentive to build somewhere. And when that revenue is continued, I think one of the really cool things that it's enabled is, oftentimes people go to chains that give them grants to build on that chain, but that's a one-time thing. And often, the incentive isn't that great to continue to develop and continue to build. But the way that Canton works, right, there's an incentive to continue to build and continue to innovate and continue to make your app better because you're competing for the same share of rewards, right? And so, we've had an incentive to build an app, and we're like up all night trying to figure out how do we make changes? How do we improve it? How do we make it more attractive? How do we make it better for builders, for developers? I think the other thing, which is really cool, is there are a large number of developers and apps on Canton now that are bootstrapped, right? And so, companies, sole founders, a few people, that came together and we're basically like, we have this really cool idea for something that will be useful and usable on the network and really interesting. And there are developers that are earning hundreds of thousands, millions of dollars in rewards, building apps without ever having to have done a raise before, which I think is also quite unique. And so, people are just building because there's an incentive to build, and there are rewards for doing so. And the result of that is, we just on Kantara, we have 25 applications building at this point, just on our app. And so, there's got to be 50 to 100 different apps that are either live or in development already on the network, and that's before listing on an exchange.
That's true. And then, George, on your end, how do you see this kind of reward structure shaping the behavior of your tokenization platform or other platforms and issuers coming to Canton? Does it adjust their calculus of how they're going to scale their application and grow users?
Yeah, I think if we look at the way, and that's why what I find fascinating with the tokenomics here is that 15 years ago, infrastructure were private and they were capex, was capital expenses. But then the cloud came, and we went from capex to opex. So your infra was now an operational expense. The model of Canton today is literally turning your infrastructure from a cost center to a profit center, or at least to try to decrease as much as possible your infrastructure cost. So you benefit from an infra that a lot of players are using, that benefit from social proof, that benefit from years of technical expertise. And now on top of that, the use for this chain is at least you are benefiting, right? Every transaction is right now still, until we hit the burn mint equilibrium, something that's profitable for you. So for that reason, I think it's really unique. And for that reason, I think a lot of the issuers or platform that wants to tokenize things are coming to Canton, because that's an opportunity for everyone here. And we are very excited to see every week new teams joining the committee, joining the network, trying to build, pinging us on Slack, saying, "Hey, can you help us do that? Can you help us build this? Do you have a few line of codes to optimize that part?" Just that is fantastic. And what I see coming is more and more open source commons for the network to precisely always push on the burn mint equilibrium, always try to maximize the moment where as many users and as much activity can be almost profitable or at no cost. And that's, I think, very interesting to monitor and track, because we see all these IUM coming on chain. We see all these big players now looking for what would be the next, ledger that they want to use. Yeah. And probably that will be a very important factor in their decision-making process.
Cool. All right, we're getting to the final parts of the episode, and last two key questions are: as the tokenomics matures and more rewards flow to builders, what do you think this means for the next wave of innovation and builders coming to Canton?
You want to go, Josh?
Sure. You're throwing the one you don't want to answer to me. I think there's an idea. I was asked not to share this idea yet, but somebody at DA shared this idea with me, basically they have credit, but I'm not saying who it is. But basically, you have elastic demand and inelastic demand, and basically the idea is that elastic demand is stuff or builders or people that are just using applications because there's a reward or there's an incentive to do it. And inelastic demand is when people are using applications because they want to use applications. It's driving real value to them and stuff like that. And so I think you get to a point where I do think now there is some level of people optimizing rewards, which happens on every network. I mean, that's why, people go after airdrops. They want to, they want to earn rewards. They want to be rewarded for being an early participant and builder. But I think later we get to a point where we're going to start seeing a lot more activity that I would describe as being inelastic or needed, or things that need to have, like Joris is going to continue to need to issue equity on chain. He's going to continue to need to mint that, right? Banks and institutions are going to continue to need to make transactions with one another. There's been a lot of conversations around collateral management and collateral mobility on Canton, and maybe being able to, if you're sending your collateral to an exchange, you don't necessarily want the entire world to know that you're doing that, and so you want to do that in a private manner. And so I think you're going to see a real growth in a lot of these real activities that are needed to happen on the network. And I think you're also going to see a divergence in applications where the applications that are driving real long-term utility are going to scale and scale and scale and scale, and some of the other applications might not. But that's how 90% of startups fail, right? A lot of the applications building on the network are startups naturally, right? And so we've created this great incentive system. All of these people are coming and building, and I think we're going to start to see this divergence of activity, over the next couple of months.
Perfect.
Yeah, I fully agree on this. I think this is part of the most interesting part of the tokenomics. The fact that it was built so that at the beginning you want everyone, right? And that's why it's a masterclass in building a network, because you want to bring people, and then there is the natural selection, and that's where everyone that is here for the long term will stay. Because once you are betting like this, whole your application, whole your activity, you want to make sure that it continues, and you are less sensitive to the price. You are not here chasing just the reward. So that's I think a very interesting. I'd like to say also, by doing that, it's a win-win-win situation. What do I mean by that? The market always win. Like, you can have a lot of players today, and if everyone is acting fairly, everyone gets a fair share of reward. The moment that you start to have people abusing the system, automatically the market happened, and the whole group is some sort of like punished. The reward drops, but the networks burn so much that the network is winning. And so that's what I think is fascinating in a way, until the burn mint equilibrium happens. Yeah. Because we are in this, like, you don't need to police, you don't need to set rules. Everything is regulated by the good behavior of people. And if they don't behave well, then the thing is automatically punishing everyone. So automatically they start to behave well again. So I think that is very, very unique to Canton.
Perfect. And then finally, what is coming up next within your teams in terms of the building or engaging with Canton at the Tie, and then with Fairmint?
Yeah, I mean, we're constantly thinking about what's next, and what are we building, and how are we expanding it. I mean, I think, a couple of things. One, we're excited to be investors in the DAT, and that just, that announcement just went public. And so that, that's a big thing, that's launching and has $500+ million behind it, and is going to go out and, accumulate more Canton, and is going to have some unique features, I think, that enables it to trade, closer to MNAV than I think other DATs have in the past. So not something we're building, but something we're invested in, that we're excited about. And then in terms of what we're building, I mean, I think we've built this amazing platform with Kantara. And so, almost every single validator in the network has downloaded the DAR file, or downloaded or uploaded the DAR file for Kantara to their validator, and now has access to it. And we've built this amazing network effect where we have this marketplace of more than 20 different applications that people can try and they can engage with. And so we look forward to continuing to build it out, but also finding other ways and other mechanisms that all of these users and these applications can continue to engage on Canton and on chain. And then as it relates to all the data work that we're doing, we have another research report coming out in the next couple of weeks or months, as well as something I mentioned earlier is a huge amount of the activity that happens on Canton does not happen on the in public transactions. It happens behind private transactions. It's permissioned. It happens on permissioned subnetworks. So we look forward to working with a lot of those applications and permissioned subnetworks to start showing more data, maybe in an anonymized way or in an aggregated way, but showing what is behind the transactions. Once you open the door, who's actually transacting? Is it a bank to a bank? Is it trillions of dollars in repo transactions, which we know happens on Canton Network? What is it exactly really kind of telling and showing that story in a bit more depth is something we're excited about.
Perfect.
That's music to my ear.
Yeah.
I love that. Yeah, because when you do private activity, unfortunately, you are not visible on any dashboard that today strictly focus on more like public type of environment. And I think it's pretty unfair. Like yesterday, I was chatting with a founder. His company is now over 125 million. And using Fairmint, he was like, "Oh, that's really cool. I will increase the amount of equity that you guys bring on chain." And he was asking me like, "Will I be in this dashboard or this dashboard?" And I was like, "No, because those guys right now are mostly focused on the public chain." And I think this is what Josh was saying. It's very important now that we start to have those players like the Tie that are effectively considering using their distribution to highlight projects that work on chain but on a privacy level, and to make sure that anyone that is participating there to the on-chain move is also visible. And so for Fairmint, one of the main challenges for the next months is probably like making sure that we bring more liquidity to what we are building. Right now, we brought $1.4 billion of assets to the Canton ecosystem in the form of those cap tables. And obviously, we work to bring the next 2 billion. But on top of that, we want to make sure that we are offering also on top of this very compliant system that we have on Canton, the whole composability of DeFi. How do we facilitate interoperability? How do we allow an investor that owns a stake in a company that has its cap table on Canton to use that asset as a collateral for something, or to simply sell it and get some form of liquidity? This is the moment where making equity move happens. We need to start to get the equity on chain. Once it's on chain, once it exists and live on smart contract levels, you can start thinking, okay, now how can we make it move faster, cheaper, easier? Do we need to respect the law? Of course we do. So that's why we are an SEC transfer agent. We are on track to get our broker-dealer license very soon. So all those activity will be anyway regulated. But we want to make sure that we facilitate that access to liquidity for all these 15,000 people.
Yeah, awesome. And then, so now some of the questions from the community. Since this this series are for the builders and the ecosystem, one key question is, how do I get started? When someone sees that you've been part of the network for months and then they want to get involved, how do you define the initial start point?
Reach out to Melvis. Reach out to Why are you asking us? That's Melvis's job. Go reach out to Melvis and the Canton Foundation. They can help you get started. You can reach out to me. You can reach out to Joris. We're all happy to help. Everyone in the network is happy to help. If you want to launch an app, there's information on the Canton Foundation, the GS and the GSF website on launching a featured application on the network. There's a process that you go through. But the network is amazing. Any builder that you see on the network, anyone you see on the Canton.tie.io dashboard, reach out to any of them, and everyone is here to grow the network and to help. So, but I think that's what I would say.
Yeah. And don't hesitate to use all the education web pages on DA website. because there is a lot of things. So it always sounds new to switch from Solidity to another language, but at the same time, this has been done by so many people now with those assets that are available. So yeah, and you can always, like Josh said, you can always ping the rest of the ecosystem, the Slack, what else do we have? Telegram, Discord,
Yep.
right?
That's it. Yeah, that's it.
So yeah, if you want to join, there are plenty of ways to do it.
Yeah, and then also it's been incredible because all the ecosystem participants are very collaborative, and also, like, for example, looking at the foundation itself, each week we have committee calls and meetings where we have over 40 to 50 people show up to help contribute to the governance and growth initiatives across the network. So everyone here is more than happy and willing to support. There's a question that says, what are your views about Canton's role in bridging institutional rails with DeFi liquidity and products?
I honestly, on this, jump, but on this, I think Canton was able to build what almost no other chain was able to do, like a moat where most of institutionals are already on board. And I can say that, like, I've been closing more customers since I did that move, because when I chat with a board member that knows who else is in the chain, by comparison with any degen chain or things that would be complex to justify, here they're like, oh my god, that's Wall Street blockchain. Let's go with Fairmint. And so I think when you start to remove this reputational risk, and that has been like a whole trend for the market over the last year, with the new administration, the new SEC chair, and overall the new market. Like, there is no more reputational risk for institutionals to move on chain. To contrary, if you look at the wire feeds of news every day around that part, we went from 1 or 2 press release per week to 25 a day. And all these institutionals are literally pushing hard to make sure that they show that they are effectively moving the needle, that they are effectively taking this high-speed train that they see moving. And it's both the institutionals and the regulators are moving that way now. It's very exciting to see.
Yeah, I would add, and I drew a terrible diagram here, which I'll walk you through. It's awful and it's impossible to see. But basically, the backstory behind Canton, right? You had DA and you had 50 different permissioned private blockchains, right? All the banks, large institutions had their own private blockchains. But imagine you have B1 as bank 1 and it wanted to interact with B2, which is bank 2. Historically, they would be running their own private chain, and bank 1 would need to run a node for bank 2 in order for them to communicate. And then bank 2 would need to run a node for bank 1. Now with Canton, you introduce the global synchronizer that allows these different banks to communicate privately between one another. And so, for example, if bank 1 wants to trade with bank 2, and then they want to send settlement instructions to the Fed or anything else, all of that is done on chain. And I think the way that Canton is built, where you can have permission networks, but those networks can communicate with one another and they can do so in a private way, is going to enable a lot of these large institutions to come on chain that wouldn't otherwise come. I mean, I think you can see that in a lot of the investors that digital asset has had, and a lot of the banks and large institutions that are already building on the network or investors in the network.
Amazing. All right, and then we have 1 more minute. So 2 initial fun questions from me. Across our network, who would you guys suggest that we invite as a guest on the next episode coming up?
Did you like among the participants of the current network, right?
Yeah, anyone, builder, infrastructure, app, anyone. Yeah.
I think the
or even outside of the network that you think may be interesting. That's
yeah. Well, I think like plenty comes. BitSafe with the CBTC,
Okay.
Bitwave also that is doing the accounting for us, and that's fantastic. Honestly, when you have so much activity on chain, it's important to be able to monitor that for the CPA. Canton Swap is doing very cool stuff, I think. You already had Yanis. He would have come to mind.
One person, George. Don't name the your whole
Okay.
role.
Yeah, it's hard. Well, I give you a choice.
Okay. Got it. Josh?
I got to choose one person now. Oh man.
Oh, two. How about two? Two guys.
You can do a group.
Well, I mean, just because you haven't had him yet, obviously he talks a lot about Canton, but I think having Eric from DA is he's obviously the most qualified person to talk about all this, because a lot of these design things that we're talking about, a lot of those were thoughts and decisions he had, and I think he would be an amazing guest. Somebody who's not on DA, I think I'm going to give you three answers. You're going to hate me. This is first is somebody who helped develop the network. Second would be an investor. So I would bring on maybe Josh from Polychain or one of the other investors that participated in the last round that gotten excited from an investment opportunity on why they wanted to participate on Canton. And then the third, from a builder's perspective, what I'd love to hear is, obviously you can have builders like us that are a bit newer to building. Obviously Joris moved from other chains, but I know you mentioned Lombard. I think they can make a really interesting guest. But somebody who's moving from one chain or another, expanding from a chain onto Canton, I think hearing that perspective is very interesting. So three answers for the one answer you asked for.
There you go. And then last question, fun one. What is something that most people don't know about you that you can share with us?
That's a tough one. I ran a investment club when I was 16 years old that had terrific metrics, and then I dropped a little bit all this world. But I have the feeling that since I'm back to Canton, I'm back to this teenager era of mine.
A fun thing that I give you a fun, totally random one. I went to Jewish day school growing up, and I in fifth grade started selling candy out of my locker, but I got shut down because I was selling unkosher candy. So that's my fun fact that I don't know anybody listening would know about me.
That's fun. That's great. Great.
And one stuff that we should share also is, and Josh, congratulations for your family. That just got extended.
That's amazing. Awesome. Great. This is it. Thank you very much. And episode 2 is done. And we look forward to scheduling more of these episodes in the coming months. As we mentioned, getting more new members of the community, becoming more aware of what's happening on Canton, learning more about Canton, and expanding that with the broader crypto and blockchain and even TradFi ecosystems. Thank you. Bye.